Happy Friday, everybody. I hope you had a great week. Another big week has come to an end, and in case you missed it, come back on Tuesday for a recap. Monday is a market holiday, the federal holiday of Juneteenth. Today is June 16, 2023, and this is your Friday planning video. Last week was an important video, if I may say so myself, as we discussed the idea of dollar cost averaging. Please go back and watch that if you get a chance, in case you missed it. Now, many of you who are not in the accumulation phase of your life may have turned that off quickly, as it may not have seemed it was directed to you. Today I want to direct some time to the other side of that, the spending phase. Yes, as you heard last week, dollar cost averaging, which is using a systematic way to save and invest, can be a great process for you. If you've done your investing and savings and you're now moving on to or have moved into the second act or even third act, and you're working off of your income and living off of your income that you're getting from Social Security, any permanent income we may have put in place, maybe with insurance products, it may be time to talk about how you're getting the rest of that income. Enter systematic withdrawal. Simply the mirror image of last week's topic. If this part is not for you, please forward on until the last minute or so of today's video. I do have something for everyone's consumption, regardless of your age or your stage in life. Let's stick to the systematic withdrawal idea first. Before I dig into the details, like dollar cost averaging, or DCA for short, this is not for everyone and it's not for all situations. Most importantly, market conditions will make a difference here, much like DCA. So please, let's talk about this and see if it is, if you're on the income side of life, and let's see if we can determine if it's a good plan or if it's not a good plan for your goals specifically. There are a few reasons I'd like to talk to you about this. First is that as you go from your work life to your retirement life, newsflash, a lot of changes will occur. One thing that I suggest to many people is that the frequency of your paycheck doesn't have to add to that change. What do I mean? Simply, if you've gotten your paycheck direct deposited once a month on the first of each month for like 30 years, when you retire, if you're going to draw income from your investments, why not set up that income to come once a month on the first of the month, just like before? This can and will assist you with your cash flow planning, since it should make that part of life unchanged. Before I go more into this, one more explanation. If this is an idea, what are other ideas? Well, how do you access your money? How do you access your income you'll live off of? Well, up until the past year or so, the previous decade actually, as you know, the cash that you had sitting in your bank was earning nearly nothing in relation to interest. Now that's changed a bit, and again, this idea of cash management is something that you have heard a lot about in these Friday videos. So one alternative is to take out the money annually with an idea of how much you may need in the year, quarterly or so, or as an as-needed basis. Any of those will work. The alternative is systematic withdrawal plan. This is set up to automatically take out a certain amount of money and move to your bank account on a regular basis, whether it's weekly or monthly, etc. The key reason, in my opinion, are as follows. First, as I mentioned, it simplifies your cash flow plans. In addition to this, though I don't give personal tax advice, if you're using your retirement assets as your source of income, you can often simplify your tax time, and you can set up your withdrawals to automatically withhold taxes from every distribution. This will keep you from a surprise income tax bill at the end of the year. Again, more on this from your tax advisor. Two final ideas on why this may work for you. First, depending on market conditions, much like we spoke about last week, when you're taking the money out, just like putting it in, with market volatility, you're getting prices for your sales on the ups and the downs of the market. This takes the market timing aspect out of the sale decision, just like the DCA takes the timing issue out of the buying decision. Another idea is also in line with market moves. We speak a lot about asset allocation, and in doing so, we know that market moves will skew those allocations up and down. If you're doing systematic withdrawals and you're using that to rebalance and address any allocation changes, this is another efficient way to keep your allocation in balance. Okay, to bring this to a close before the long weekend, the markets are closed on Monday for Juneteenth. Watch for full rundown on the week's market action, along with the explanation of the holiday on Tuesday for the market update. Before we end, as I mentioned, today is June 16th. I'm not sure if any of you look at the calendar every day and take note of the date. I do. It's part of my daily routine. And these days, it does take my breath away. As you can tell, we are quickly approaching the end of the month, end of the quarter, and end of the first half of the year. We have a lot to go over and a lot to accomplish this year. This is the planning video. I'm not talking about market action. I'll save that for the market update. I'm talking about all the things that we should be focusing on. I'm trying to bring these to you in small bits, but the end of Q2 is already here. Oh my. I just want to throw out a short to-do list that admittedly not everything applies to each of you, but you get the picture. Before the time and the clock strikes at the end of December 2023, I'd like to know that we've been able to discuss and address some of the following. Reminder, I don't give tax or legal advice, but this is a list for us to work with your tax advisor and legal advisors on as well. So here's a partial list. estate plans, account titles, wills and trusts, powers of attorneys, healthcare directives, life insurance, retirement plans, current and old beneficiaries, college savings, permanent income, long-term care planning, asset allocation, asset location, and tax efficiency, investing, and withdrawals. Okay, it's not an all-inclusive list, but you get the picture. All of this is on my list for you. Please stay in touch. Time marches on. Come back next week. Remember, no video on Monday. Tuesday is the market update this week. Have a great long weekend.